Are we on the brink of a financial storm?
That's right. Economist Emily Brown and market analyst David Lin are here to dissect the key indicators behind this crisis.
In this video, we've distilled their hours of insight into concise takeaways you can act on.
So gear up. Emily kicks us off with the alarming rise in consumer debt and what it means for the average homeowner.
And stay tuned for David's take on how rising treasury yields might upend the market as we know it. Today, we'll explore insights shared by economist Emily Brown on the Rebel Capitalist channel, focusing on the economic crisis.
Emily's analysis emphasizes the role of rising treasury yields in creating risks for investors.
Emily Brown argues that current market indices may be overvalued, indicating a potential correction.
David Lin supports this discussion by noting the recent volatility in market behavior.
What does Emily Brown say about the effects of rising treasury yields on equity markets?
Emily points out that rising yields increase borrowing costs, thereby affecting risk assets like stocks.
David Lin notes that current market volatility introduces significant uncertainty for investors.
Emily, in her analysis, shares strategies to reduce risk during this period of uncertainty.
What market corrections does Emily Brown foresee?
Emily expects potential corrections in the range of 15 to 25% as volatility continues.
In conclusion, Emily advises closely watching treasury yields as they indicate economic health.
She also recommends that households reassess their budgets to prepare for expected price increases.
Today, we're exploring recent market dynamics with insights from Emily Brown.
Emily emphasizes the risks associated with potential market corrections as equity prices rise.
Emily Brown suggests the current bull market may be nearing its limits, signaling a possible correction.
David Lin argues that historical patterns have led to pullbacks, which supports Emily's view.
How does Emily link economic indicators to market sentiment?
Emily suggests that despite strong indicators, a cautious atmosphere is developing among investors.
What insights does David share about market history?
David explains that rapid market surges can signal upcoming corrections influenced by speculation.
What does Emily predict for equity markets soon?
Emily anticipates market corrections as investors react to high valuations and external pressures.
What final tips does Emily provide for investors?
Emily advises investors to anticipate market volatility and adopt long-term investment approaches.
Today, we're reviewing insights from Emily Brown regarding the alarming rise in consumer debt and its implications for foreclosures.
Emily outlines critical statistics indicating that millions are at risk of losing their homes if this trend continues.
Emily Brown highlights that household debt has reached unprecedented levels, raising red flags across the economy.
She emphasizes that if consumer debt is not addressed, it could lead to a wave of foreclosures throughout the year. According to Emily, the debt-to-income ratio for many households is climbing, which increases financial strain.
Families are finding it increasingly difficult to keep up with payments amidst rising living costs. Emily warns that rising foreclosure rates could destabilize the housing market.
The concern is not just for individual families, but also for broader economic stability.
What does Emily anticipate for the housing market in the near future?
Emily predicts a significant increase in foreclosures, which may adversely affect overall economic recovery.
Emily suggests that robust policy measures are essential to support those at risk of foreclosure and consumer debt.
Moreover, increasing financial literacy will enable families to manage their debt better and avoid falling into crisis.
Today, we're diving into a crucial warning from the financial sector as presented by Dr. Emily Brown during her conversation with David Lin.
Dr. Brown highlights the risks present in equity markets and discusses how these warnings could lead to broader economic implications.
Dr. Brown indicates that financial institutions are marking heightened risks for equity in the near term.
David Lin concurs, stressing that these concerns are interconnected with inflation trends and possible market instability. Dr. Brown specifies that banks are warning about potential overexposure, which can precipitate market adjustments.
She connects this to the current inflation trends that could affect asset valuations. Dr. Brown explains that inflation is a significant factor affecting market predictions.
She urges investors to adopt a cautious strategy as inflation is likely to influence future investment returns.
What predictions does Dr. Brown have regarding potential market corrections?
Dr. Brown anticipates corrections in equity markets as a result of escalating inflation and resulting volatility.
Dr. Brown emphasizes that investors must remain vigilant about inflation metrics to navigate current market uncertainties.
She highlights that portfolio diversification is essential for mitigating anticipated risks.
Today, we're diving into insightful financial advice from Graham Stephan on the reasons behind his choice not to spend money frivolously.
Graham discusses how maintaining a budget and focusing on savings can pave the way for financial independence.
Graham points out that minimal spending allows room for important investments that yield better returns.
He emphasizes the importance of distinguishing between needs and wants to maximize savings. Graham explains that by saving money and directing it towards investments, individuals can build long-term wealth.
It's tempting to spend now for immediate gratification.
However, focusing on investments can provide more valuable rewards down the line.
What does Graham envision for future financial trends based on his advice?
He predicts that individuals disciplined in their expenditures will emerge in a stronger financial position in the future.
In conclusion, Graham emphasizes that intentional spending is crucial for a secure financial future.
Adopting his philosophies can guide us toward a more prosperous financial path.
By keeping expenditures minimal, we can allow our savings to grow, leading to greater security in the long term. Today, we're exploring the future of silver investments.
David emphasizes the favorable conditions impacting long-term silver holders.
David points out silver is often viewed as a safe haven asset.
He notes that increasing demand could lead to a price rise. David Lin explains that economic uncertainty drives investment in silver.
He forecasts rising industrial demand, particularly in electronics, will boost prices. David discusses how investor sentiment shapes market trends.
He highlights that positive news can drive greater interest in silver.
What predictions does David Lin have for silver prices in the next year?
He foresees potential price appreciation due to ongoing economic challenges.
In conclusion, David advises investors to stay informed and ready to seize opportunities.
He emphasizes that long-term holders are likely to benefit significantly.
What a wealth of knowledge we've gathered today.
Indeed. Our guests provided insights that can really help investors navigate these turbulent times.
I love how David Lin highlighted silver's potential, blending excitement for its gains with a caution about market understanding.
And Graham Stephan brought a critical perspective on financial prudence. Saving is just as crucial as investing.
It's fascinating how Dr. Emily Brown drew attention to the looming risks from inflation in the markets.
Right. And then Emily Brown's warning about rising consumer debt opened a whole new angle on potential crises.
Yes, and yet there were points of contention. For instance, how Dr. Emily perceived the timeline for inflation risks compared to Graham's focus on savings.
And the differing opinions on the housing crisis timeline, too. David Lin clearly sees urgency there.
All these insights are invaluable for anyone trying to make informed financial decisions.
Absolutely. And if you enjoyed today's discussion, don't forget to like this video and subscribe to our channel.
Your support ensures more expert insights come your way, keeping you ahead in the financial game.
Plus, stay tuned for our next video where we delve into global trade dynamics and their market impacts. You won't want to miss it.